Hi, please go through this risk disclaimer. So today we are going to learn in the part 6 of the basic building block series something which we call as stacked zones. So what are stacked zones? So often you would find that there are two zones that are very close to each other, that are almost touching each other or are just touching each other. So let me give you an example. So this is an example of ICICI Bank daily chart. So right now you can see that ICICI Bank is in a pretty good uptrend, almost in a straight line, so to say. So if I mark this zone, this rally base rally, and this drop base rally, so these together would be called as stacked zones. So we have one zone stacked on top of the other. Another example over here is this zone, this rally based rally. We would also consider this zone and this zone as stacked zones because there's a very tiny white space between the two, right? And there is another zone below it. This, however, would not be considered the stack zone because there is a considerable white space or distance between these two zones. So among the zones that I have plotted on the screen, these two together are stack zones. The second one and the third one from the top can also be considered as stack zones, but the third and the fourth having some distance between them, some white space between them, would not be considered as stack zones. So what is the significance of stacked zones? When institutions start creating zones, so we know that there is a good probability of pending orders in those particular zones. And in zones like this, where we have two zones very close to each other, it is often probable that the major stack of orders could be either on the lower zone or on the upper zone, right? We can never be sure that exactly where the zone is. Exactly where the majority of the stack of pending order is lying. So in case of stacked zones, we usually, if they're not of a very big size, we can consider them as a single zone combined together. So for example, if I wish to go long in in the first two stack zones, I would keep my entry. Let's say here, slightly above or at the upper demand zone, and I would place my stop loss below the stack zone combined. That is the second, that is below the end of the second zone. So entry here, stop loss here, and target as per my trade strategy or trade setup, depending upon whether I am using a 2-hour, 3-hour, an hour-based target, or whether I'm using an opposing zone-based target. That depends upon your trade plan. But the entry would be here. The stop loss would be below the second one. I have often seen traders just trade the first one and keep their stop loss below it. So in such cases, the chances of getting stopped out is really high. Two reasons for that. First is that very often we would have traders who keep their stop losses at the end of the first zone, which is often inside the second zone within the stack zones. So a lot of liquidity starts developing inside the second stack zone, right? And we all know that institutions love liquidity. So if there is too much of a sell order sitting here and they want their own buy orders to be filled, of course it would be really tempting for them to push prices down towards this second zone where the stop loss orders are, and then from there take the prices higher. So chances of getting stopped out in such zones, if you just take the first among the stack zones as a zone to trade, is higher. And if you take the stop loss below, if you keep it below the second zone, it is much more safer, but the demerit is that the zone becomes much more wider. So if you're trading futures, then the risk also increases. And even if you are trading with stocks and according to your position size, and if you play an R-based targeting strategy, so the first R, the 1 R, the 1-to-1 R would be somewhere around here. The 2 R would be somewhere around here, approx. So therefore, wider the zone, the more distant the target becomes. And the smaller the zone, the more near the target becomes if you're playing a 2R or a 3R, an R-based targeting. Right? So these are the merits and demerits. So let me just summarize it once again. So if you use the first zone itself, then the zone becomes smaller. The target R becomes nearer, right? Whereas if you keep the stop loss below the stack zone combined, then of course the chances of getting a stop loss reduces, but the chances of reaching the target also reduces slightly because the distance to the target increases because the zone size widens. Yep. So it's up to you which way you want to place the stop loss. I have mentioned both the merits and demerits of both the cases. And there is another way of trading this which I often prefer to keep the zone size smaller and even the target nearer. I would not take an entry here at the beginning of the first among the stack zones, but I would keep it at the beginning of the second zone over here like this, and stop loss below the stack zone. So in this particular case, the zone remains smaller. The target also remains quite close because, of course, the zone size is smaller now, so a 2R would be quite near if you are targeting a 2R strategy for targets. But again, a small demerit here is that often prices would come to the proximity or just touch the first zone and it would move away, right? So chances of missing out on such trades is pretty high. And there is one more information I'd like to share with you, particularly the study that I follow is that, let's say I'm using this style of setting my entry and stop loss. That is, I'm entering at the start of this lower zone or the second one among the stack zones, right? To reduce my zone size. However, if the market comes to the upper zone and it moves again, it responds and reverses from there, I would then not take the trade if the price comes back to the zone and come towards the second stack zone. So I hope you got this, or let me just repeat this what I said right now. So if, let's say, prices now came towards the stack zone and I have kept my entry and stop loss the way I have drawn right now, that is at the start of the second among the stack zones, right? This one, not this one. So my entry is, sorry. Okay. So my entry is not here. I have kept my entry at the start of the second zone, right over here. And price comes to the start of this upper zone, enters it slightly without giving me entry, it moves up considerably from the zone. Then if price returns back, I would not take this trade anymore. So the moment price reacts already from the first upper zone, right? So in those cases, the chances are higher that the institution had kept their stack of pending orders in the upper zone, and it becomes a lower probability trading the lower zone once it's already uh, showed us that price is already reacting in the upper zone. So hopefully this concept of stack zones is clear to you now. If not, then I would request you to watch the video from the start once again. I know that I have covered quite a few concepts very quickly in few minutes, but they were important ones to explain since this is the beginner series. A lot of you are beginners to this strategy. So therefore, I would request you to just rewind the video and watch it again, take notes if required. So, and yes, whatever I have explained for the demand zone, the same applies on the opposite side towards supply zones. So if you have two supply zones stacked one top of each other, the same rule applies. You must always keep the stop loss above the second supply zone, right? So for example, if I take this as a supply zone, let's say this one, and then the second one is this one, right? So you had a rally, base drop, and then again a rally base, and then drops. Of course, this is compression, but let's keep the compression concept aside. And in this video, just talk about stack zones. So you can see that as price went up over here, it actually breached the first one, went in the second stack zone, right over here, and then reversed from the second zone. So the stacked zones or the pending orders were actually placed in the upper zone among the stack zones, these two stack zones, right? Then price dropped from there. So this is an example on the opposite side. So had you been using the first strategy, you would have sort of entered here. This is one way of entry. I'm sorry. This should be entry at blue color. So one way to enter this stack zone is keep your entry over here at the start of the first zone. Stop loss must always be kept above, slightly above the combined stack zone. So somewhere over here, right above this second one, the combined stack zone. This is one way of entry and stop loss setting, right? The zone becomes pretty wide in such cases. The second way which I prefer is to keep the entry at the start of the second zone, and stop loss would remain above the combined stack zone, above the second zone, right? And now the zone size reduces, and therefore my hour-based targets also are nearer. So if I am going with the 2-hour strategy, then approximately the target would have been met over here, somewhere around here. This would be the 2-hour distance from the entry, right? So hopefully you understood the concept of stack zones, and if not, I would request you to just rewind the video and watch it once again. This is very important concept, and often you would see me marking zones closer to each other, and in a lot of examples that I place at different forums, you would also see me talking about stack zones. So this is the concept of stack zones, and it's important for new learners to know about it. And this is how you mark the entry and the stop loss for stack zones. So thank you so much. Until the next video, keep learning. And if you like the concepts shared, please subscribe to this channel and share with your friends and families so that we can grow as a community. Thank you. Thank you so much.